10-year note yields week over week saw big declines right up until the very end of Friday's session when things sort of started to normalize and we saw yields creep back higher, back towards the center of the old range. Now, this week was all about China and the U.S. We saw a lot of trade talk hype, a lot of optimism, a lot of pessimism, then some more optimism. And ultimately, we threatened to break 10-year notes outside of the range, that 240 to 260 range we've become so comfortable in. And the market just barely got down to the low end, and then it reversed late this week on more optimism, albeit, though, we haven't really gotten anything signed or put in stone. So right now, as the market just sort of hovers near the bottom of the range, we trade back towards 2.5%, which has been the sort of the level we've been at for quite some time. And while it still is stubbornly low, I think at this point right now, that seems like a win, the fact that we're back into the middle of the range and not threatening to break out. And as you can expect, market volatility was very elevated this week, but ended the week off the highs because we traded back towards the center of the range. And ultimately, I think that that's going to probably hold as long as we hover near that 2.5% yield level. Now, lastly, let's look at what we have coming up ahead. We've got retail sales, we've got some housing numbers, we've got some Fed speakers, but all this is going to come down to is more of China trade, more China-U.S. trade talks, along with more global growth, and look what's going on in Europe. And I think ultimately the macro picture is going to take center stage here. So right now we're hovering near 2.5%. That's been the level we've been sticking at, with a threat below 240 sort of out the door. I look for volatility to come down and the market to normalize. And if you look at stocks, they're telling you that everything's okay. So right now, heading into the weekend, things look pretty good based on where they were about 24 hours ago.